Imagine a fortress that looks unbreakable from the outside. Gleaming towers, confident guards, and vaults overflowing with treasure. But step inside, and the foundations are cracking. The walls are held up by nothing but borrowed time and printed illusions. This is Russia's banking system in 2026, a ticking time bomb disguised as stability. The warning signs are screaming. Massive debt is not just growing. It's strangling the life out of banks, businesses, and everyday Russians. This isn't a minor glitch. This isn't a temporary squeeze. This is the slow-motion implosion of a financial empire, and when it detonates, the fallout will be catastrophic. Stick around, because today we're exposing the terrifying reality behind the headlines. Let's start with the brutal truth. Russia's economy entered 2026 on shaky ground, but the real killer is debt. It's everywhere. Corporate towers drowning in loans, households buried under mortgages and credit cards, and the government itself propping up the war machine with borrowed billions. According to the Central Bank of Russia, as of July 2025, the combined debt of organizations and households hit a staggering 163.9 trillion rubles. That's more than the entire GDP of many nations, and it's climbing fast. But why? How did a country that boasted sanctions-proof resilience end up in this debt trap? Here comes the first shock: the war in Ukraine. It's not just a military campaign. It's an economic vampire sucking the blood from Russia's financial veins. For nearly 4 years, Moscow has poured trillions into tanks, missiles, and soldiers. The official budget deficit ballooned to 4.3 trillion rubles by mid-2025, far exceeding targets. Analysts at the KSE Institute reported a record-breaking 4.9 trillion ruble deficit in the first 7 months alone, 129% over the full-year plan. Where does the money come from? Not from booming exports. Sanctions have slashed oil revenues, forcing Russia to sell crude at massive discounts to buyers like China and India. The result? The government turns to banks, forcing them to lend at gunpoint or face the consequences. Think about it like this. You read a family maxing out credit cards to fund an endless renovation. At first, it looks great. New kitchen, shiny floors. But the bills pile up, interest compounds, and suddenly, you're skipping meals to pay the minimum. Russia is that family, but on steroids. Corporate debt is the frontline casualty. Russian companies are facing a record burden, with liabilities soaring to 99.3 trillion rubles by October 2025, up 10.4% in just 9 months, according to a Kremlin-linked think tank. High interest rates, jacked up to 20% by the central bank to combat inflation, are squeezing profits dry. 17 leading companies are already in deep trouble, holding a chunk of the debt that's becoming impossible to service. The central bank knows this. In a desperate move, they eased reserve rules for banks, allowing loan restructurings to drag into the first half of 2026. It's like patching a sinking ship with duct tape. It buys time, but the water keeps rising. Problem loans are exploding. Even after restructuring, troubled debt has surpassed 11%, equaling about $131 billion, as reported by RBC Ukraine. These aren't small fry. We're talking massive defense contractors and energy giants forced into loans they can't repay. When defaults hit, banks will absorb the hit, eroding their capital and sparking a chain reaction. But wait, isn't Russia sitting on mountains of reserves? Didn't they brag about hundreds of billions stashed away? Sure they did. But sanctions have frozen over $300 billion in foreign assets since 2022. The U.S. alone seized $5 billion from the central bank's holdings. Now, 70% of Russia's banking assets are under international sanctions, crippling their ability to borrow abroad. Domestic banks are left holding the bag, lending to risky sectors while their own balance sheets fray. The Atlantic Council warns that the economy has been overheating since late 2023, demand outpacing supply, growth unsustainable. By 2026, stagnation sets in, amplified by militarization that diverts funds from productive investments. Now, let's zoom in on households, the everyday Russians caught in the crossfire. Debt repayments now eat up 9.4% of household income, per the central bank's Q3 2025 Financial Stability Review. Mortgages, car loans, and consumer credit are skyrocketing as wages lag behind inflation. Official figures hover near double digits, but real inflation, the kind that hits your grocery bill, is far worse. People are borrowing to survive, not thrive. The central bank is scrambling with stricter loan requirements, but it's too late for many. A debt crisis here isn't abstract. It's families losing homes, savings evaporating as the ruble weakens. This is where the danger accelerates. Banks are the glue holding it all together, but massive debt is dissolving that glue. Problem assets are piling up, and if depositors panic, starting mass withdrawals, we're looking at a systemic crisis by late 2026. A Kremlin-linked think tank spelled it out. By October 2026, if trends continue, Russia could face total banking failure. Non-payments and defaults are already rising, as warned by Russian officials themselves. Fortune reported a top official admitting a banking crisis is possible amid the Ukraine war strain. The Washington Post echoes this. Oil sector woes, consumer pains, and banking cracks could break the economy in 2026. Let's break it down with the numbers that matter. State debt servicing costs, up 23% in 2026, reaching 8.8% of the budget, per Reuters. Public debt is low at 18.6% of GDP, but that's deceptive. It's the quality, not quantity, that's killing them. The OSW Center for Eastern Studies highlights mounting financial challenges. No new projects financed in the past year. Steel consumption collapsed. Brain drain accelerating. Unemployment risks surge as factories shift to war production, leaving civilian sectors starved. Sanctions are the invisible hand tightening the noose. The EU's December 2025 ban on transferring immobilized central bank assets back to Russia? That's billions locked away. UK, EU, and US sanctions have denied Russia at least $450 billion since 2022. Energy exports crippled, money transfers blocked, laundering networks exposed. It's a multi-front assault. The size analysis shows how sanctions reshaped Russia's future. Financial isolation forces reliance on domestic debt, which is now buckling under the weight. Here's the convergence of failures. War drains reserves, sanctions slash revenues, high rates crush borrowers, and debt compounds everything. Inflation isn't just rising, it's a slow confiscation of wealth. Banks weaken as bad loans mount. That $131 billion in troubled debt? It's a mountain waiting for an avalanche. Trust in the ruble erodes, foreign investors flee, and domestic savers get nervous. When reserves run dry, and they're burning fast, the illusion shatters. Unemployment surges, businesses fold, and the banking system, once a pillar of Putin's power, becomes his Achilles heel. But is there a way out? Moscow's playbook: print more money, restructure endlessly, and pray for oil prices to spike. But economics doesn't care about prayers. It collects its debts with interest. The bell asks, is Russia facing a debt crisis? The answer is yes, and it's already here. Stricter consumer loan rules are band-aids on a hemorrhage. Without peace or sanction relief, unlikely in 2026, the strain intensifies. Russia's banking system isn't approaching a cliff, it's already teetering on the edge. Massive debt is the push that sends it over. This is the cumulative failure of distorted priorities, a war economy that devours its host. The bill is coming due, and it will be devastating. Factories idle, savings shrink, and the ruble's power fades. This is not recovery, this is regression. Economics always wins in the end, and for Russia, the endgame is unfolding now. If this exposed the cracks you've suspected, hit that like button, subscribe for more unfiltered economic truths, and drop a comment. Do you think Russia's banks can survive 2026? Share this video, because the world needs to see the reality behind the rhetoric. Thanks for watching Powerconomy, where we cut through the noise to reveal the collapse.